Welcome to UBC Real Estate Exam Prep. In this video, we're diving into Chapter 24, Lesson 19, From Contract to Completion. We'll break down the key concepts, timelines, and responsibilities that take a real estate transaction from the moment an agreement is signed all the way to final completion. Whether you're preparing for your exam or just want to solidify your understanding, these practice questions will help you master the process from start to finish.
Question 1. If an item of the buyer's personal property, such as an automobile, is accepted by the seller as part payment of the purchase price, the correct answer, A. The value of the traded property is listed as a credit to the buyer and a debit to the seller. Explanation. When a buyer trades in something like a car as part of the payment, it reduces the amount of money they need to pay. That's why it's a credit to the buyer. The seller receives the car instead of cash, so it reduces their cash proceeds, making it a debit to the seller. Why the other options are wrong. B. The value of the traded property will appear on the seller's statement of adjustments only. Incorrect. The trade affects both parties, not just the seller. It must appear on both statements. C. No entry to either statement of adjustments is needed to reflect the trade. Incorrect. This trade must be recorded because it changes how much the buyer owes and how much the seller receives. D. The value of the traded property is listed as a debit to the buyer and a credit to the seller. Incorrect. A debit to the buyer would mean they owe more, which isn't the case here. The trade actually lowers what they owe. Final tip. Always remember, credits equals good for that party, reducing what they owe or increasing what they get. Debits equals reducing their benefit. Question 2. Which of the following statements is true? The correct answer, C. On the completion date of the sale of real property, the buyer is usually entitled to the transfer of title. Explanation. On the completion date, the buyer pays the purchase price, and in return, the seller must transfer title to the buyer as per the contract. This is a fundamental part of real estate transactions. Why the other options are wrong. A. The total of the debit column on the seller's statement must be identical to the total of the credit column on the buyer's statement. Incorrect. The buyer's and seller's statements of adjustments are separate and do not need to match exactly. Each party has different financial entries. B. The practice is to hold the seller responsible for the taxes on the adjustment date itself. Incorrect. Responsibility for property taxes depends on whether the seller has already paid them or if the buyer needs to pay them later. The seller isn't automatically responsible for taxes on the adjustment date. D. The adjustment date and the possession date must be the same day. Incorrect. The adjustment date and possession date are often the same, but they don't have to be. The adjustment date can align with the completion date, possession date, or fall in between. Final tip. Know your key dates. The completion date equals when title transfers. The adjustment date equals when financial responsibilities shift. The possession date equals when the buyer moves in. Question 3. Victor has agreed to sell his home to Pamela for $75,900. The completion and adjustment date is set at November 14th. The real estate commission payable by Victor is 7% of the selling price. Pamela has made a deposit of $2,000, which the real estate brokerage has passed to Pamela's lawyer to be deposited in a trust account until the completion date. Victor has agreed to accept Pamela's diamond ring as part payment equal to $7,500. Pamela is borrowing $65,000 from the Bank of Dad as a first mortgage loan. Victor paid the current year's property taxes on the date. They were due in the amount of $896. Pamela's lawyer will charge $600 to cover both legal and registration fees. Victor will be paying out a judgment registered against the title to his house in the amount of $6,225, and the legal fee to remove it will be $85. Victor is relying on Pamela's lawyer to handle this transaction for him. As no exemptions apply to this transaction, property transfer tax will be payable upon completion. It is not a leap year. As well, Pamela is not a foreign entity for property transfer tax purposes. The balance due to complete required from Pamela is buyer's statement of adjustments, Pamela. Item. Purchase price, $75,900 debit. Deposit to lawyer, $2,000 credit. Ring, $7,500 credit. First mortgage, $65,000 credit. Buyer's share of taxes, $117.83 debit. Lawyer's fee, $600 debit. Property transfer tax, $759.00 debit. Balance due to complete 2,876.83 credit. So total debit 77,376.83. So total credit 77,376.83. Since the deposit is being paid to the lawyer in trust, the amount will not appear on the seller's statement of adjustments. November 14th minus December 31st equals 48 days. 48 days divided by 365 times $896 equals $117.83. Because the total debits and credits must balance, in order to find the balance due to complete, you must first calculate the total debits, $77,376.83, and then subtract the known credits. The result is the balance due from the buyer to complete the transaction. Question 4. Where a deposit is paid directly to a seller on account of the purchase price. Correct answer B. The amount of the deposit will appear on both the buyer's and the seller's statement of adjustments. Explanation. Buyer's statement, credit for the deposit, they've already paid this much. Seller's statement, debit for the deposit, they've already received this much, so they'll get less on closing day. Why the other options are incorrect. A. Only on the buyer's statement? Wrong. The seller must also reflect that they already got this money. C. Only on the seller's statement? Nope. The buyer needs credit for the deposit they paid. D. Doesn't show up on either statement? Definitely wrong. That would mean the deposit just disappeared. Quick tip. If the deposit was paid to a brokerage instead, it would usually only show up on the buyer's side, since the seller hasn't received it yet. But in this case, it went directly to the seller, so both sides need to account for it. Question 5. Blackacre, a revenue-producing property, has been sold. The date of adjustment will be January 31st, 2011, exactly 18 months after the contract of purchase and sale was signed, and a deposit of $3,500 was paid directly to the seller. If interest on this deposit accrues for the benefit of the buyer, 6% per annum, compounded annually, what will be the amount shown on the seller's statement of adjustment? 6 IYR. 1 shift PYR. 3,500 PV. I.5 N. 0 PMT. Calculate FV. Press FV. Calculator displays $3,819.68. Correct answer B. $3,819.68 debit. Why it's a debit? Because the deposit was paid directly to the seller. It reduces the cash proceeds the seller will receive at closing, so on the seller's statement of adjustments, it's shown as a debit of $3,819.68. Pro tip. Always pay attention to who holds the deposit, who benefits from the interest, and whether it's a debit or credit based on who receives or loses cash at closing. Question 6. Violet has agreed to sell her home to Parker for a price of $150,000. Parker has paid a deposit of $15,000 directly to his brokerage. There is a mortgage registered against title that has an outstanding balance of $71,000, which Parker will assume. Parker will also be receiving financing by way of a second mortgage for $34,000. Property taxes of $1,095 were not paid by Violet by the due date. Therefore, a penalty of $105 has been assessed. The outstanding property taxes and penalty will be paid by the conveyancer from the sale proceeds. A real estate commission of 6% of the purchase price is payable. Conveyancing fees for this transaction are $600. The adjustment, completion, and possession date is August 31st. It is not a leap year and property transfer tax is payable. As well, Parker is not a foreign entity for property transfer tax purposes. What is the amount that Parker requires to complete this sale? Solution. Buyer's statement of adjustments, Parker. Item. Purchase price, 150.000.00, debit. Deposit to agent, 15.000.00, credit. Assumed first mortgage, 71,000.00, credit. Second mortgage, 34.000.00, credit. Buyer's share of taxes, 369.00, debit. Conveyancing fees, 600.00, debit. Property transfer tax, 1,500.00, debit. Balance due to complete, 32,469.00, credit. August 31st minus December 31st equals 123 days. 123 divided by 365 times $1,095 equals $369. Because the total debits and credits must balance. In order to find the balance due to complete, you must first calculate the total debits, $152,469, and then subtract the known credits. The result is the balance due from the buyer to complete the transaction.
Question 7. You have sold your property with the adjustment date on September 20th. You had paid the taxes on July 2nd. The buyer should be responsible for that share of the tax bill from and including, correct answer, B, September 20th to December 31st. Here's why. Even though you, the seller, paid the taxes up front on July 2nd, the adjustment date, September 20th, is the day the buyer starts benefiting from the property. So, the buyer needs to reimburse you for their share of the taxes starting from and including September 20th through the rest of the year. Let's break down the wrong options. A, January 1st to September 20th. Incorrect. That's the seller's portion. The buyer didn't own the property during that time. C, September 21st to December 31st. Incorrect. Close but wrong. The buyer is responsible starting on the adjustment date, not the day after. D, July 2nd to December 31st. Incorrect. Taxes were paid on July 2nd, yes, but ownership didn't transfer until September 20th, so the buyer isn't responsible for anything before then. A quick tip, whenever you see the phrase, from and including the adjustment date, that means the buyer starts paying their share on that exact day. Question 8. Which of the following statements relating to statements of adjustments is false? False statement of adjustments is B. A brokerage's real estate commission always appears on the buyer's statement of adjustments as a credit. Here's why. This statement is false because a brokerage's real estate commission is paid by the seller, so it appears as a debit on the seller's statement and never shows up on the buyer's statement of adjustments. Why the other options are true. A. An existing mortgage assumed by the buyer reduces what the seller gets in cash. Correct, so it's a debit on the seller's statement. C. The seller is responsible for property taxes up to the day before the adjustment date. The buyer covers from the adjustment date onward. D. If taxes are still to be paid in the future, and part of them is for the seller's occupancy, that amount is shown as a credit on the buyer's statement, because they'll be covering it later. Quick tip. Anytime you're asked to find the false statement, double-check each one carefully. They love to sneak in half-truths to trip you up. Question 9. At the time a transaction is completed, which one of the following items will be the responsibility of the buyer? The correct answer is B. Costs of preparing a first mortgage. Explanation. When a real estate transaction is completed, certain costs and responsibilities are typically divided between the buyer and the seller. A. Tax penalty with respect to overdue taxes. Seller's responsibility. If the seller was late paying property taxes, they are solely responsible for any penalties. B. Costs of preparing a first mortgage. Buyer's responsibility. If the buyer is obtaining a mortgage, they usually cover the cost of preparing and registering it. C. Unpaid taxes to possession date. Seller's responsibility. Taxes are typically prorated based on the possession date, so the seller pays up to that date. D. Commission. Seller's responsibility. Real estate commissions are almost always paid by the seller as part of the selling costs, so option B is correct. The buyer is typically responsible for the cost of preparing a first mortgage. Question 10. Which of the following is true? The possession date in a standard form contract of purchase and sale is. The correct answer is B. The date on which the buyer takes vacant possession of the property, subject to any existing tenancy agreements. All options explained. A. The date on which adjustments are made between the parties for property taxes, etc. Incorrect. That's the adjustment date, not the possession date. B. The date on which the buyer takes vacant possession of the property, subject to any existing tenancy agreements. Correct. The possession date is when the buyer physically takes possession of the property, unless there's a tenant whose tenancy is continuing. C. Always the same day as the completion date. Incorrect. While sometimes the possession date and completion date may be the same, they often differ. It's common to have possession a day or two after completion. D. The date on which the buyer must assume responsibility for risk of loss or damage to the property. Incorrect. The risk transfers on the completion date, when legal title is transferred. Conclusion.
Option B is true. The possession date refers to when the buyer takes possession, typically after title has transferred and subject to any tenancies. Question 11. Where would the commission appear on the statements of adjustments? The correct answer is C. The commission only appears on the seller's statement. Explanation. Commission is typically paid only by the seller as part of the selling costs in a real estate transaction. Therefore, it is recorded as a debit expense on the seller's statement of adjustments. The buyer does not pay any portion of the commission directly, so it does not appear on their statement. Why the other options are incorrect? A. Incorrect. The buyer's statement should not reflect the commission at all. B. Incorrect. Same reason, the buyer doesn't pay commission. D. Incorrect. The commission never appears on the buyer's side. Conclusion. Only the seller is charged for the real estate commission, so it appears only on the seller's statement as a debit. Question 12. Assume that it is not a leap year. A property is sold on the following terms. Price: $195,000, cash. Commission: 5% on the first $100,000 of the sale price, and 2.5% on the balance. Adjustment: possession and completion date: August 28. Taxes for the current year were paid by the seller on July 1st in the amount of $1,015. The buyer has paid a deposit of $20,000. Legal fees for the conveyance amount to $491. Where would the tax adjustment appear on the statements of adjustment? The correct answer is A. As a credit on the seller's statement and a debit on the buyer's statement. Here's why. Property taxes in BC are typically due July 1st and cover the full calendar year, January 1st to December 31st. In this case, the seller paid the full year's taxes, $1,015, on July 1st. Since the adjustment to possession and completion date is August 28, the buyer owes the seller for the portion of the year from August 28 to December 31st. This means the buyer reimburses the seller for their share of taxes. The reimbursement appears as a credit to the seller, they are getting money back. A debit to the buyer, they are paying the seller. Breakdown. Total days in the year, not a leap year, 365. Taxes were paid for the full year, $1,015. Days from August 28 to December 31st equals 4 days from Aug 28 to 31, plus 30 days in September, plus 31 days in October, plus 30 days in November, plus 31 days in December equals 126 days. Buyer's share of taxes equals $1,015 times 126 days divided by 365 days, $350.39. So on the statement of adjustments, seller statement plus $350.39, credit. Buyer's statement minus $350.39. Final answer, A. As a credit on the seller's statement and a debit on the buyer's statement. Question 13. Victoria has agreed to sell her home to Penny for $140,000. Property taxes of $2,300 have been assessed and were paid in full by Victoria on July 15th. There is an outstanding late payment penalty of $85, which Victoria has not yet paid. The adjustment and possession date is December 28th. It is not a leap year. Penny's share of the property taxes will appear on her own statement of adjustments as. The correct answer is C, a debit of $25.21. Option 3 is correct because Victoria paid the full year's property taxes, so Penny must reimburse her for the portion from December 28 to December 31st. That's 4 days. The buyer's share is calculated as 4 divided by 365 times $2,300 equals $25.21. This appears as a debit on Penny's statement. The $85 penalty is not Penny's responsibility, so it doesn't appear on her statement. Options 1, 2, and 4 are incorrect. Question 14. Vivian has agreed to sell her home to Peggy for $140,000. Peggy has saved up $15,000, which she paid to her brokerage as a deposit. In addition, she has obtained $92,000 in new mortgage financing from her bank. Conveyancing fees of $690 and a mortgage administration fee of $250 are payable by Peggy. Vivian is paying a 6% real estate commission to her real estate brokerage. The adjustment and possession date is December 28th. Vivian has agreed to take back a short-term mortgage in the amount of $8,000 in order to help Peggy finance the purchase. In addition, the conveyancer will be discharging the existing mortgage on title, which has an outstanding balance of $12,000. Finally, property taxes of $2,300 have been assessed and were paid in full by Vivian on July 15th. These taxes are to be adjusted between the parties. There is an outstanding late payment penalty of $85, which Vivian has not yet paid. No one is entitled to a homeowner grant, and, as no exemptions apply, Peggy will be responsible for paying the property transfer tax on completion. Assume that it is not a leap year, and Peggy is not a foreign entity for property transfer tax purposes. The cash proceeds of the sale, which will be received by Vivian, are option A. $111,540.21 is correct, because the seller, Vivian, will receive the cash proceeds of the sale after all her debits are subtracted from the total credits. Seller's credits, purchase price, $140,000. Buyer's share of taxes, $25.21. Total credits equals $140,025.21. Seller's debits, commission, $8,400. Seller take-back mortgage, $8,000. Outstanding mortgage to discharge, $12,000. Penalty on taxes, $85. Total debits equals $28,485. Cash proceeds equals $140,025.21 minus $28,485 equals $111,540.21. So option A is correct. Options B, C, and D are incorrect because they do not account for all adjustments or are miscalculated. Another way of doing this question. Seller's statement of adjustments, Vivian, item, purchase price, $140,000, credit, commission, $8,400, debit, take-back mortgage outstanding, $8,000, debit, outstanding mortgage, $12,000, debit, buyer's share of taxes, $25.21, credit, penalty, $85, debit, cash proceeds of sale, $111,540.21, debit, total credit, $140.25.21, December 28 to December 31st equals 4 days. 4 divided by 365 times $2,300 equals $25.21. Because the total debits and credits must balance, in order to find the proceeds of sale, you must first calculate the total credits, $140,025.21, and then subtract the known debits. The result is the balance of cash that the seller can expect to receive after all outstanding expenses relating to the property have been paid. Question 15. Given the following information, calculate the cash proceeds of sale to the seller on completion. Price, $195,000. Deposit paid to brokerage, $15,000. Financing, first mortgage of $71,000 to be assumed. Second mortgage of $34,000 has been arranged by the buyer. Taxes, the taxes in the amount of $1,500 are not due before the completion. Commission, 6% of sale price. Conveyancing fees, $600. Adjustment, completion, and possession dates, June 30. Note, it is not a leap year. Given, sale price, $195,000. Deposit paid, $15,000 to brokerage. First mortgage, $71,000 assumed by buyer. Second mortgage, arranged by buyer, irrelevant to seller's proceeds. Commission, 6% of sale price, which equals $11,700. Taxes for year, $1,500. Seller's share of taxes, January 1st to June 29th. 180 divided by 365 times $1,500 equals $739.73. Other way of doing the question on the right side of the screen. Seller's statement of adjustments. Item. Purchase price, $195,000 credit. First mortgage, $71,000 debit. Seller's share of taxes, $739.73 debit. Commission, $11,700 debit. Cash proceeds of sale, $111,560.27. January 1st to June 29th equals 180 days. 180 days divided by 365 days times $1,500 equals $739.73. Question 16. Which of the following statements is true? Option 2. Where the licensee acts only for the seller, real estate commission always appears as a debit on the seller's statement of adjustments, and does not appear on the buyer's statement of adjustments. Is correct because the commission is paid by the seller only, and so it would appear as a debit to the seller, reducing the amount of cash proceeds of sale due to the seller, and the buyer's statement would not be affected. Because of this, option 4 is incorrect. Option 1 is incorrect because taxes will appear as a credit on the buyer's statement of adjustments and a debit on the seller's statement of adjustments in the case that taxes are to be paid in the future by the buyer. Option 3 is incorrect because although it is true that conveyancing fees would appear on the buyer's statement of adjustments as a debit, the fees would not be included in the seller's statement of adjustments. Chapter 24. A seller agreed to sell her home for $155,000. The buyer paid a $5,000 deposit to his brokerage. The buyer will assume the existing mortgage on title, which has an outstanding balance of $71,000. Furthermore, the buyer will be granting a second mortgage to his father for $34,000. Taxes are unpaid and overdue in the amount of $1,095, with a further penalty owing of $105. Real estate commission is 6% of the sale price. Conveyancing fees for the transaction are $600. The adjustment, completion, and possession date is August 31st. It is not a leap year, and property transfer tax is payable in this transaction. Moreover, assume that the buyer is not a foreign entity for property transfer tax purposes. What are the cash proceeds due to the seller? This question deals with statements of adjustment and completion of the sale. You must take into account all debits and credits in order to solve for the correct value. Debits: first mortgage, $71,000. Taxes plus penalty, $1,095 plus $105. Commission, $9,300. Credits: sale price, $155,000. Taxes for August 31st to December 31st that must be paid by the purchaser for the time they live in the property. Don't forget that the purchaser always pays taxes for the completion date and thereafter. 123 days divided by 365 days times $1,095 equals $369. Credits: $155,369 minus debits $81,500 equals $73,869. Seller's statement of adjustments. Item: purchase price $155,000.00. Credit: assumption of first mortgage $71,000.00. Debit: unpaid and overdue taxes plus penalty $1,200. Debit: buyer's share of taxes $369. Credit: commission $9,300. Debit: cash proceeds of sale $73,869. Debit: August 31st to December 31st equals 123 days. 123 days divided by 365 days times $1,095 equals $369. Because the total debits and credits must balance, in order to find the proceeds of sale, you must first calculate the total credits, $155,369, and then subtract the known debits. The result is the balance of cash that the seller can expect to receive after all outstanding expenses relating to the property have been paid. Final correct option, C, $73,860. Question 18. Where a deposit is paid directly to a seller on account of the purchase price. Correct answer, D. The amount of the deposit will appear as a credit on the buyer's statement and a debit on the seller's statement of adjustments. Explanation. When a deposit is paid directly to the seller, it reduces the buyer's balance due, so it's shown as a credit on the buyer's statement. The seller's cash proceeds, so it's shown as a debit on the seller's statement. This is why the deposit must appear on both statements of adjustments. Why the other options are incorrect? A and C. Wrong because the deposit does not appear on only one party's statement, it must be shown on both. B. Wrong because the entries are reversed. The buyer gets a credit, not a debit, and the seller gets a debit, not a credit. Question 19. In a particular real estate transaction, taxes for the current year, in the amount of $516, were paid by the seller on July 1st. The adjustment, possession, and completion date is July 28th. Where would the tax adjustment appear on the statements of adjustments? Option 2, B, as a credit on the seller's statement and a debit on the buyer's statement is correct because when taxes are previously paid by the seller. The buyer should reimburse the seller for the portion of the year from the adjustment date onward. The reimbursement will appear as a credit on the seller's statement and a debit on the buyer's statement. Options 1, 3, and 4 are incorrect for this reason. Question 20. If the sale price was $120,000, the commission is 5%. The current year's taxes have been paid and were $1,095, and the adjustment date is August 30th. How much will the seller receive on completion? Seller's statement of adjustments. Item, purchase price, $120,000, credit. Commission, $6,000, debit. Buyer share of taxes, $372, credit. Cash proceeds of sale, $114,372, debit. Our total credits and debits balance out to $120,372. Let's figure out our taxes. August 30th to December 31st equals 124 days. 124 days divided by 365 days times $1,095 equals $372. Question 21. Victor is selling his house to Paula with an adjustment date and a possession date of August 16th and a completion date of August 14th. He is concerned about the fact that he just filled his oil tank. Which one of the following is true? Option 3 is correct because oil left in the storage tank is an item usually settled between the parties outside of the statements of adjustments. Options 1, 2, and 4 are incorrect for the same reason. Question 22. Which one of the following statements correctly describes the manner in which taxes are adjusted? Option 1 is correct because the seller has already paid all of the taxes for the current year and needs to be refunded the amount proportional to the time that the seller is no longer living in the property. Option 2 is incorrect because the seller is responsible for the full amount of any penalty. It is not adjusted because only the seller is liable to pay the taxes and failed to do so in a timely manner. Option 3 is incorrect because the seller must pay the buyer in advance of the tax payment for the portion of the year prior to the adjustment date. Chapter 24. Question 23. Benson has purchased a home from Vanessa. The sale is completed on April 15, and the property taxes are adjusted on the completion date. Property taxes are due on July 1st. In this case, option A is correct, because where property taxes are to be paid in the future by the buyer, the seller owes the share of taxes from January 1 up to the adjustment date. In this case, up to April 14, as the adjustment date is April 15. Option B is incorrect, because taxes are split according to the proportion of the year that each party has ownership of the property, rather than an equal split. Option C is incorrect, because Benson is responsible for paying taxes on July 1st. Vanessa will have to pay Benson for her share of taxes from January 1 through April 14. Option D is incorrect, because the property taxes will have to be paid regardless of when the sale completes. Question 24. Valentina has agreed to sell her home to Petra for $140,000. Petra has saved up $15,000, which she paid to her brokerage as a deposit. The deposit will appear. Option 2 is correct. When a deposit is paid to a real estate brokerage, the amount of the deposit will be reflected on the buyer's statement of adjustments as a credit. It will not appear on the seller's statement of adjustments. Therefore, options 1, 3, and 4 are incorrect. Question 25. Vince has agreed to sell his home to Pedro for $75,900. To assist in the purchase, Pedro is borrowing $65,000 from his uncle as a first mortgage loan. Pedro's loan from his uncle will appear. Option 3, only on Pedro's statement, is correct because when a new loan is received by the buyer from a mortgage company or third party, the amount appears only as a credit on the buyer's statement of adjustments, as a new loan does not affect the seller's cash proceeds of sale. The $65,000 loan will only appear on Pedro's statement as a credit. Options 1, 2, and 4 are therefore incorrect. Chapter 24. Question 26. Vince sold his property to Paula with a possession and adjustment date of May 1st. Vince has not yet received his current year's tax notice, but last year's taxes were $847. Paula's lawyer feels taxes will increase 20%. Which of the following is correct? Option 2, Vince should be charged the estimated taxes from January 1st to April 30th is correct, because in the case that taxes are to be paid in the future by the buyer, the seller's share from January 1st to the adjustment date will be a debit on the seller's statement of adjustments and will reduce the cash proceeds due to him. Option 1 is incorrect because Paula should be given a credit for the estimated taxes between January 1st and April 30th, i.e., the time that Vince owned the property, not from May 1st to December 31st. Option 3 is incorrect because of the amount of taxes is not yet known. It will be calculated based on estimates. Option 4 is incorrect because the taxes will appear as a credit on Paula's statement and a debit on Vince's statement. Question 27. Which of the following items would appear on the buyer's statement of adjustments as debits? Option 4D. Buyer's share of taxes paid, purchase price, and conveyancing fees is correct because these are all amounts owed by the buyer. Option 1 is incorrect because the balance due to complete is a credit on the buyer's statement of adjustments. Option 2 is incorrect because the deposit paid and the balance due to complete are credits on the buyer's statement of adjustments. Option 3 is incorrect because these are all credits on the buyer's statement of adjustments. Question 28. Mr. Smith has contracted to sell his house to Mr. Jones for $200,000. Mr. Jones has paid a deposit of $15,000, the balance in cash. Conveyancing fees are $350. Taxes were prepaid by the seller, totaling $800 net for the period of July 1st to December 31st, and the commission is 5%. Completion, adjustment, and possession dates are July 1st. As well, Mr. Jones is not a foreign entity for property transfer tax purposes. Property transfer tax will be due on completion. The balance due to complete is, the correct answer is D, $188,150. Buyer's statement of adjustments, Mr. Jones. Item, purchase price, $200,000, debit. Deposit, $15,000, credit. Conveyancing fees, $350, debit. Buyer's share of taxes, $800. Property transfer tax balance due to complete, $188,150. Total credit, $203,150. Balances out to $203,150 debit. Because the total debits and credits must balance, in order to find the balance due to complete, you must first calculate the total debits, $203,150, and then subtract the known credits. The result is the balance due from the buyer to complete the transaction. Question 29. In a real estate transaction, when the property taxes for the subject property are not yet due and will be paid in the future by the buyer. Option 2, B, the seller's share of the property taxes will be debited on their statement of adjustments is correct, because the seller's share of the property taxes will reduce the cash proceeds due to him, her, and thus will be debited on his or her statement of adjustments. Option 1 is incorrect, because taxes are apportioned between the parties as of the adjustment date, and this is reflected on the statements of adjustments. Option 3 is incorrect, because taxes may be paid out of the proceeds where taxes are due but have not yet been paid, whereas in this situation, the taxes are not yet due. Option 4 is incorrect, because a credit on the buyer's statement of adjustments would reflect an amount that was owed to the seller. And in this situation, the seller's share of the taxes are owed to the buyer so that the buyer can pay them in the future when they become due. Question 30. Vanessa has agreed to sell her home to Paul for a price of $150,000. Paul has paid a deposit of $15,000 directly to his brokerage. There is a mortgage registered against title that has an outstanding balance of $71,000, which Paul will assume. Paul will also be receiving financing by way of a second mortgage for $34,000. Property taxes of $1,095 were not paid by Vanessa by the due date. Therefore, a penalty of $105 has been assessed. The outstanding property taxes and penalty will be paid by the conveyancer from the sale proceeds. A real estate commission of 6% of the purchase price is payable. Conveyancing fees for this transaction are $600. The adjustment, completion, and possession date is August 31st. It is not a leap year, and property transfer tax is payable. As well, Paul is not a foreign entity for property transfer tax purposes. What are the cash proceeds of sale to Vanessa? Seller's statement of adjustments, Vanessa. Item, purchase price, $150,000, credit. Assumed first mortgage, $71,000, debit. unpaid and overdue taxes plus penalty, $1,200, debit. Buyer's share of taxes, $369, credit. Commission, $9,000, debit. Cash proceeds of sale, $69,169, debit. The total credits, $150,369, balances out the total debits, $150,369. August 31st to December 31st equals 123 days. 123 days divided by 365 days times $1,095 equals $369. Because the total debits and credits must balance, in order to find the proceeds of sale, you must first calculate the total credits, $150,369, and then subtract the known debits. The result is the balance of cash that the seller can expect to receive after all outstanding expenses relating to the property have been paid.
Question 31. Garth has agreed to buy Whiteacre from Elisa for $448,000. Property taxes are not yet due. The taxes last year were $1,324, and the notary public has told Garth to expect a 10% increase in that amount for the current year. The completion and adjustment dates are February 18th. It is not a leap year. The property tax amount to be paid by Elisa will appear on her statement of adjustments as Option 4. Debit in the amount of $191.53 is correct because Elisa is responsible for 48 days out of 365 days for property taxes, as the buyer is responsible for the adjustment date. The total property taxes is estimated to be $1,324 times 1.1 equals $1,456.40. Therefore, Elisa's portion is $1,456.40 times 48 days divided by 365 days equals $191.53. This is a debit on the seller's statement of adjustments, as it will reduce the cash proceeds due to her. Option 1 is incorrect because this value does not reflect the expected 10% increase in the current year's property taxes. Options 2 and 3 are incorrect because the seller's portion of the property taxes appears as a debit on the seller's statement, as it reduces the cash proceeds due to the seller. Chapter 24. Question 32. A seller agreed to sell her home for $155,000. The buyer paid a $5,000 deposit to his brokerage. The buyer will assume the existing mortgage on title, which has an outstanding balance of $71,000. Furthermore, the buyer will be granting a second mortgage to his father for $34,000. Taxes are unpaid and overdue in the amount of $1,095, with a further penalty owing of $105. Real estate commission is 6% of the sale price. Conveyancing fees for the transaction are $600. The adjustment, completion, and possession date is August 31st. It is not a leap year, and property transfer tax is payable in this transaction. Moreover, assume that the buyer is not a foreign entity for property transfer tax purposes. One is the amount of the cash that the buyer will be required to provide on the completion date. Buyer's statement of adjustments. List of the items. Purchase price, $155,000. Debit. Deposit, $5,000. Credit. First mortgage, $71,000. Credit. Second mortgage, $34,000. Credit. Buyer share of taxes, $369,000. Debit. Conveyancing fees, $600,000. Debit. Property transfer tax, $1,550. Debit. Balance due to complete, $47,519.00. Credit. The total credit and the total debits balances out to $157,519.00. August 31st to December 31st equals 123 days. 123 days divided by 365 days times $1,095 equals $369. Because the total debits and credits must balance, in order to find the balance due to complete, you must first calculate the total debits, $157,519.00, and then subtract the known credits. The result is the balance due from the buyer to complete the transaction. Final answer, D, $47,519.00. Question 33. Valerie has agreed to sell her home to Phil for $75,900. The real estate commission payable by Valerie is 7% of the selling price. The real estate commission will appear, option 2, B, on Valerie's statement only, is correct because the real estate commission is payable by Valerie and would appear as a debit only on her statement. Options 1, 3, and 4 are incorrect as it does not affect Phil's balance due to complete. Chapter 24. Question 34. A property is sold for $175,000. Real estate commission is 5% on the first $100,000 and 2.5% on the balance of the sale price. The adjustment, possession, and completion date is July 28. Taxes for the current year in the amount of $516 were paid by the seller on July 1st. The buyer has paid a $20,000 deposit to her brokerage. The legal fees for the conveyance amount to $384. No exemptions apply to this transaction, so property transfer tax is payable upon completion. It is not a leap year. As well, the buyer is not a foreign entity for property transfer tax purposes. The required balance due to complete from the buyer will be buyer's statement of adjustments, list of items, purchase price $175,000.00, debit, deposit $20,000.00, credit, legal fees for conveyance $384.00, debit, buyer's share of taxes $221.95, debit, property transfer tax $1,750.00, debit, balance due to complete $157,355.95. The total debits and credits balances out to $177,355.95. July 28 to December 31st equals 157 days. 157 days divided by 365 days times 516 equals 221.95. Final answer, D, 157,355.95. Question 35. Which of the following items would appear on the vendor's statement of adjustments as debits? Option C, legal fees for discharge of second mortgage, sales commission, and assumption of first mortgage is correct, because the legal fees for discharge of the second mortgage, sales commission, and assumption of first mortgage all appear on the vendor's statement of adjustments as debits. Options 1 and 4 are incorrect, because the purchaser's share of taxes paid appears as a credit on the vendor's statement of adjustments. Option 2 is incorrect, because sale price appears as a credit on the vendor's statement of adjustments. Chapter 24. Question 36. Vincent and Pamela signed a standard contract of purchase and sale for the sale of Vincent's property. Vincent agreed to give title free of encumbrances. Pamela is putting on a new mortgage. Costs are as follows. Legal fees for conveyance, $400. Legal fees to discharge an existing mortgage on title, $100. Which one of the following statements is correct with respect to the statement of adjustments? Option 3, C. Pamela should be debited $400 and Vincent should be debited $100 is correct because legal fees for conveyance are classified under the debit of the purchaser, and legal fees to discharge an existing mortgage on title is under debit of the vendor. Options 1, 2, and 4 are incorrect for this reason. Chapter 24. Question 37. Veronica has agreed to sell her home to Patty for $75,900. The completion and adjustment date is set at November 14. Veronica paid the current year's property taxes on the date they were due in the amount of $896. It is not a leap year. Patty's share of the year's property taxes will appear on the seller's statement of adjustments as a Option 4, credit of $117.83 is correct, because when taxes are previously paid by the seller, the buyer should reimburse the seller for the portion of the year from the adjustment date onward. The reimbursement will appear as a credit on the seller's statement and a debit on the buyer's statement. Patty's share of the year's property taxes, November 14 to December 31st, equals 48 days, is calculated in the following manner. 48 days divided by 365 times $896 equals $117.83. Options 1, 2, and 3 are therefore incorrect. Chapter 24. Question 38. Kenny has agreed to buy Pinkacre from Alia for $448,000. He has deposited $25,000 with the notary public who will complete the conveyance. The brokerage's commission is 5% on the first $100,000 and 1.5% on the balance of the purchase price. Property taxes are not yet due. The taxes last year were $1,324, and the notary public has told Kenny to expect a 10% increase in that amount for the current year. The completion and adjustment dates are February 18th. There are 2 mortgages on Alia's title. Kenny is assuming Alia's first mortgage in the amount of $123,544. Kenny has arranged a second mortgage through the Big Bank Incorporated in the amount of $98,000. The balance of the purchase price and the property transfer tax will be paid in cash out of proceeds from the sale of Kenny's other property. Alia will pay out her existing second mortgage of $23,000 from the proceeds of this transaction. The notary's fees are $700 for the conveyance, $250 for preparation of Kenny's new mortgage, and $75 for discharging Alia's second mortgage. It is not a leap year, and Kenny is not a foreign entity for property transfer tax purposes. The balance due to complete on Kenny's statement of adjustments is option 3, $209,174.47, is correct because the debits on the buyer's statement of adjustments include the sale price of $448,000, property transfer tax of $6,960, conveyancing fees of $700, and fees for the preparation of Kenny's new mortgage of $250, and the credits include the deposit of $25,000, the seller portion of the tax of $191.53, the assumption of the first mortgage of $123,544, and the second mortgage of $98,000. Buyer's statement of adjustments, Kenny. Item purchase price, $448,000, debit. Deposit to notary, $25,000, credit. Seller's share of taxes, $191.53, credit. Assumed first mortgage, $123,544, credit. Second mortgage, $98,000, credit. Conveyancing fee, $700, credit. Mortgage preparation, $250, credit. Property transfer tax, $6,960, debit. Balance due to complete, $209,174.47, credit. Total debits balances out the total credits, $455,910. $1,324 times 1.10 equals 1,456.48. January 1st to February 17 equals 48 days. 48 divided by 365 times 1,456.40 equals $191.53. Because the total debits and credits must balance, in order to find the balance due to complete, you must first calculate the total debits, $455,910, and then subtract the known credits. The result is the balance due from the buyer to complete the transaction. Question 39. Vanna has agreed to sell her cottage to Pat. Vanna and Pat used a standard contract of purchase and sale in which they agreed to the following dates. Completion date, August 31st, 2018. Adjustment date, January 1st, 2019. Based on this information, which of the following statements is true? Option 1. A. There will be no adjustment for property taxes on the buyer's statement of adjustments. Is correct because the buyer in a real estate transaction assumes responsibility for the taxes from the adjustment date onwards. Since Pat is assuming responsibility for the taxes on January 1st, the first day of the year, no adjustment is necessary. Remember that property taxes are paid for a calendar year, even though they are usually due on July 1st. Options 2, 3, and 4 are incorrect because no adjustment is necessary for property taxes in this scenario, and therefore, property taxes will not appear as a debit or credit on either the buyer's or seller's statement of adjustments. Question 40. Which of the following would appear as a debit on the seller's statement of adjustment? Option 4 is correct because all of the statements would appear as debits on the seller's statement. Option 1 would appear as a debit on the seller's statement of adjustments because an existing mortgage on title, which will be assumed by the buyer on completion of the sale, reduces the amount of cash that the buyer will owe to the seller. For Auction 2, the seller is responsible for clearing the title of any encumbrances, and any fees for this are the responsibility of the seller, which would reduce the amount of cash due to him or her and would be shown as a debit to the seller. For Option 3, the seller is liable to pay overdue taxes and any penalty owing as a result of late payment. This reduces the amount of cash owed to the seller and would appear as a debit on their statement of adjustments. Question 41. Which one of the following statements correctly describes the manner in which taxes are adjusted? Option 4, none of the above is correct. Option 1 is incorrect because if the seller has already paid the current year's taxes, the seller must be reimbursed for that portion of the year from and including the adjustment date. This will be a debit to the buyer and a credit to the seller. Option 2 is incorrect because the seller is responsible for the full amount of any penalty. It is not adjusted because only the seller was liable to pay and failed to do so in a timely manner. The buyer would be debited their portion of taxes from the adjustment date to December 31st, and the seller would be credited the buyer's portion of taxes and debited the whole year's taxes due plus any late penalties. Option 3 is incorrect because if the taxes are not yet due, an estimate of the charge will have to be made. Question 42. Carl has agreed to buy White Acre from Anya for $448,000. He has deposited $25,000 with the notary public who will complete the conveyance. The brokerage's commission is 5% on the first $100,000 and 1.5% on the balance of the purchase price. Property taxes are not yet due. The taxes last due were $1,324, and the notary public has told Carl to expect a 10% increase in that amount for the current year. The completion and adjustment dates are February 18th. There are 2 mortgages on Anya's title. Carl is assuming Anya's first mortgage in the amount of $123,544. Carl has arranged a second mortgage through the Banque Nationale de Paris in the amount of $98,000. Balance of the purchase price and the property transfer tax will be paid in cash out of proceeds from the sale of Carl's other property. Anya will pay out her existing second mortgage of $23,000 from the proceeds of this transaction. The notary's fees are $700 for the conveyance, $250 for preparation of Carl's new mortgage, and $75 for discharging Anya's second mortgage. It is not a leap year, and Carl is not a foreign entity for property transfer tax purposes. The cash proceeds of sale, which will be received by the Anya on the completion date, is Option 2 is correct because the brokerage's commission of $10,220, the seller's portion of property taxes of $191.53, the assumption of Anya's first mortgage of $123,544, the second mortgage of $23,000, and the discharge fees for the second mortgage of $75 are all debits on the seller's statement, and the sale price of $448,000 is a credit on the seller's statement. Seller's statement of adjustments, Anya. Item, purchase price, $448,000, credit. Commission 10/2020. Debit. Seller's share of taxes, $191.53. Debit. Assumption of first mortgage, $123,544.0. Debit. Discharge of second mortgage, $23,000.00. Debit. Legal fees. Discharge of second mortgage, $75. Debit. Cash proceeds of sale, $290,969.47. Debit. Total debits balances out to total credits, $448,000. 1324 times 1.10 equals $1,456.40. January 1st to February 17th equals 48 days. 48 divided by 365 times $1,456 equals $191.53. Because the total debits and credits must balance, in order to find the proceeds of sale, you must first calculate the total credits, $448,000, and then subtract the known debits. The result is the balance of cash that the seller can expect to receive after all outstanding expenses relating to the property have been paid. Question 43. In a particular real estate transaction, taxes for the current year in the amount of $516 were paid by the seller on July 1st. The adjustment, possession, and completion date is July 28. It is not a leap year. Based on these facts, what amount of tax would appear on the seller's statement of adjustments? Option 1 is correct because when taxes are previously paid by the seller, the buyer should reimburse the seller for the portion of the year from the adjustment date onward. The buyer's share of the year's property taxes, July 28 to December 31st, equals 157 days, is calculated in the following manner. 157 divided by 365 times $516 equals $221.95. This amount will appear as a credit on the seller's statement and a debit on the buyer's statement of adjustments. Options 2, 3, and 4 are therefore incorrect. Chapter 24.